Hello, this is Business Now, reaching you live from IBrandTV News Studios in Lagos, Nigeria. Coming up, OPEC increases Nigeria's crude oil production quota to 1.8 million barrels per day. The Central Bank of Nigeria orders banks to accept indemnity from customers for highly secured online funds transfers. The CBN raises online transfer limit to 25 million naira for individuals and 250 million naira for companies. Foreign investors withdraw a net of 4.2 billion shillings from the Nairobi Securities Exchange as flight to Western markets continues. Hello again, and thanks very much for joining us. And here are business stories making headlines at this hour. I'm Michael Nath. The sidelines of President Muhammadu Buhari's state visit to Spain, Melik Kiri, Group Managing Director NNPC Limited, has reiterated the commitment to sustain the strategic energy partnership between Nigeria and Spain. Kiri made this known while addressing Nigerian and Spanish business leaders on investment opportunities in the Nigerian oil and gas industry in Madrid, Spain. Buhari had earlier met with the Spanish President Pedro Sanchez, King of Spain, King Felipe VI, and gave a speech at the headquarters of the World Tourism Organization in Madrid. During the visit, President Buhari said Nigeria looked forward to increasing bilateral relations with Spain, even as he signed bilateral agreements and memorandum of understanding with the Spanish government. The MOUs cover areas of prisoner transfer, sports and culture, as well as the economy. Describing their partnership as an important one for the NNPC, Kiri said 26% of all liquefied natural gas produced in Nigeria ended up in Spain. According to him, 14% of all crude oil produced in Nigeria ends up in the same country. With these prospects, he remarked that Spain is an important market for Nigeria. The Central Bank of Nigeria has raised the limit for highly secured online funds transfer from 100 million naira to 250 million naira for companies and from 10 million naira to 25 million naira for individuals. This according to a recently released circular by the Central Bank of Nigeria, signed by Musa Jimo, Director, Payment System Management Department. This revision would take effect on the operations of the NIBSS instant payment system and other electronic payment options with similar features in Nigeria. Similarly, the Central Bank of Nigeria has raised the limit of highly secured online funds transfer from 100 million naira to 250 million naira for companies and from 10 million naira to 25 million naira for individuals. This according to a recently released circular by the Central Bank of Nigeria, signed by Musa Jimo, Director of Payment System Management Department. The CBN further stated that the NIBSS instant payment system and other electronic payment options must accept indemnity from customers for highly secured online funds transfer above 1 million naira for individuals and 10 million naira for corporates, subject to a maximum of 225 million naira for individuals and 250 million naira for corporate. According to NIBSS data, the NIP volume increased by 4% to 1.4 billion in the last 4 months, up from around 999 million in the same period last year. Now, the Central Bank of Nigeria has ordered banks and payment service providers to accept indemnity from customers for highly secured online fund transfers. It stated this in a circular signed by the Director of Payment System Management Department, Musa Jimo. The circular said that further to the circular on the above, banks are hereby required to comply with the following. The circular further directed banks to provide customers with the option of electronic or paper indemnity based on the customer's preference and implement electronic indemnity with stricter controls requiring biometric verification of identity. For the first time since April 2020, when the COVID-19 pandemic hit the global oil industry, the Organization of Petroleum Exporting Countries on Thursday increased Nigeria's production quota to about 1.8 million, that is 1.799 barrels per day. The new oil drilling limits increased Nigeria's production deficit by an estimated 400,000 barrels per day, since the country had only been able to produce about 1.4 million barrels per day of the 1.8 barrels per day ration. Cartel and its allies, OPEC, would increase oil production by 648,000 barrels per day in July, as opposed to the 400,000 barrels per day initially approved, and a subsequent increase to 432,000 barrels per day. And now, from the approved schedule, Saudi Arabia would drill 10.833 million barrels per day in July, same for Russia, while the UAE would produce 3.127 million barrels per day. In the same vein, Angola would produce 1.502 barrels per day. Iraq would be 4.58 million barrels per day, while Algeria was given a limit of 1.039 million barrels per day. The Nigeria Customs Service Federal Operations Unit, Zone A, has announced that it seized 16 trucks of foreign rice smuggled into the country from neighboring Benin Republic. Speaking at a press briefing yesterday, the Customs Area Controller, FOU Zone A, Deputy Controller Hussein Ejibuno, said aside the 16 trucks of foreign parboiled rice that were seized, 599 cartons of frozen poultry products were also intercepted by the unit. According to him, the unit now have a renewed vigor to fight the menace of smuggling, saying it has re-strategized its operations to block revenue leakages to curb importation and exportation of prohibited goods. He said the deputy duty paid value of the seized items is 818.1 million naira, adding that the unit intercepted 41,950 liters of premium motor spirit, 9,917 bags of smuggled foreign parboiled rice, 116.3 kilograms of Indian hemp, 29 units of motorcycles, 54 cartons of creams, and 3,260 pairs of used shoes. More companies are moving to free zones established by the Nigerian Export Processing Free Zones Authority and the Oil and Gas Free Zones Authority to avoid taxes. The Chairman, House of Representatives Committee on Public Accounts, Oluwole Oke, revealed this during a dialogue on growth initiative for fiscal transparency in Abuja. It is a dialogue series supported by USAID and implemented by Order Paper Advocacy. He also queried OGFZA being a separate entity and not licensed by NEPZA, noting that both free zones authorities ought to have been registered by the Corporate Affairs Commission, but that they were now registered companies instead. Okay, lamented that all the big companies paying taxes to Nigeria have suddenly moved to the free zones to avoid paying taxes. He claimed Dangote Free Zone registered 101 companies in the place, and NAPZA and CAC are not aware of these companies. He noted that with this model, Nigeria was losing huge tax revenues. Nigeria's foreign trade rose to 13 trillion naira in the first quarter of 2022, increasing by 11.1% from 11.7 trillion naira recorded in the previous quarter and 65.4% higher than the 7.86 trillion naira recorded in first quarter of 2021. This contained in a recently released foreign trade report for first quarter of 2022 by the National Bureau of Statistics. According to the report, the improvement in Nigeria's mechanized merchandise trade was due to increases in crude oil export receipts in the quarter under review. Specifically, Nigeria's crude oil earnings rose by 31.66% quarter-on-quarter to 5.62 trillion naira in first quarter of 2022. Consequently, total export earnings improved by 23.13% from 5.77 trillion naira recorded in fourth quarter of 2021 to 7.1 trillion naira in first quarter of 2022. as against 0.67% decline in import bill to 5.9 trillion naira in the same quarter. Thus resulted in a 1.19 trillion naira positive trade balance, the first since the second quarter of 2021. Nigeria's electricity generation rebounded slightly on Thursday as the generating companies generated a total of 76,444.98 MWh of energy, representing an increase of 5.13% compared to 72,712.08 megawatts generated in the previous day. Energy generation had fallen to an almost 2-month low on Wednesday, 1st June 2022, to 72.71. Consequently, energy supply improved by 5.08% to 75,342.22 megawatts on Thursday. This according to information from the Transmission Company of Nigeria. Nigeria's energy generation and supply has fallen further below the minimum of 105,000 megawatts required to record some level of stability in power supply in the country. Nigerians continue to grapple with epileptic power supply as a result of disruptions at the national grid and the inability to operate at full capacity. Now, Nigeria attracted a total of $1.57 billion in capital inflows in the first quarter of 2022, fallen by 28.1% compared to $2.19 billion recorded in the previous quarter. This according to the recently published Capital Importation Report released by the National Bureau of Statistics. Compared to the corresponding period of 2021, Nigeria's capital importation declined by 17.46% from $1.91 billion received in first quarter of 2021. Notably, the largest amount of capital importation by type was received through portfolio investment, which accounted for 60.87%, that is $957.58 million. This was followed by other investments with 29.28%, and foreign direct investment accounted for 9.85% of total capital import first quarter of 2022. Now, meanwhile, foreign portfolio investment increased by 48.95% to $957.58 million from $642.87 million recorded in the previous quarter. On the other hand, foreign direct investment reduced by 56.74% from $358.23 million recorded in the fourth quarter of 2021 to $154.97 million recorded in the previous year. The Canadian government has announced plans to strengthen its trade relationship with Nigeria and expects to boost both economies, oil and gas sectors. The second Secretary Commercial and Trade Commissioner, Deputy Commissioner of Canada to Nigeria, Sonia Hakil, at a one-day seminar and webinar on the subject of scale inhibitor application and monitoring organized by the Pacegate Energy and Resources Limited, said that the priority of the Canadian government is to seek areas of collaboration to strengthen an oil and gas trade between the two countries. According to it, the passage of the Petroleum Industry Act into law presents lots of investment opportunities for many Canadian oil and gas firms to invest in the country. She pointed out that the volume of trade, which had hit over $1.2 billion, presents lots of potential for collaboration and opportunities for Nigeria and Canada. Now to Africa's scene. Minister of State for Petroleum Resources, Timipres SYLVA, yesterday in Abuja, said unless African countries pool their financial resources together for the improvement of necessary energy infrastructure, clean energy targets, as well as projected climate change actions may remain elusive. Speaking at the Nigeria-Africa Natural Resource and Energy Summit, SYLVA said there was a need for the continent to start looking inward to develop strategies for raising investments for the purpose of achieving greener Africa without jeopardizing the continent's energy sufficiency. Disturbed about energy poverty on the continent, The minister said it remained important that every nation and region comes up with a green initiative to foster a collective combative action against the incessant threat to the planet caused by carbon dioxide emission. Quoting UN data, he said about 760 million people lack access to electricity worldwide, with 3 out of 4 of them living in the sub-Saharan Africa. SYLVA said, quote, "Climate change is definitely of serious concern to Africa, but of equal concern is the alarming level of energy poverty. Both must be addressed in a sustainable manner. It must be a win-win situation." End of quote. Foreign investors withdrew a net of 4.2 billion shillings from the Nairobi Securities Exchange last month, continuing the flight to Western markets where interest rates have risen sharply in the last few months. Net sales by foreign investors have been on the rise for the past 3 months, a period in which the U.S. has increased its benchmark rates in line with a rise in inflation. In March, they sold a net of 1.45 billion shillings, rising to 1.74 billion shillings in April and 4.2 billion shillings last month. Foreign investors normally trade almost exclusively on large blue-chip stocks at NSE, with a sell-off correlating to a fall in the share price of large firms such as Safaricom, BAT Kenya, and Equip Group. The telco's stock shed 23% in May, ending the month at 26% share, while BAT Kenya shed 6.3% to 420 shillings. Equity holdings shed 5% to close May at 45.50 shillings per share. Now, foreign scene. The German parliament on Friday approved raising the country's minimum wage to 12 euros per hour, fulfilling a key campaign pledge that Chancellor Olaf Scholz made in the run-up to last year's election. The nearly 15% increase will take effect on October 1. The government says some 6.2 million people in Germany currently work for less than 12 euros per hour. Germany was a relative latecomer to instituting a national minimum wage. It was introduced in 2015 at the instance of Scholz's center-left Social Democrats, who at the time were junior partners in conservative Chancellor Angela Merkel's government. Northeast Asian country, Japan, becomes one of the first major economies to introduce a legal framework surrounding stable coins. This comes at a time when there have been pertinent questions asked about the backings of many of the existing stablecoins as a result of the fallout of the Terra blockchain's programmable stablecoin, UST, that lost its peg to the US dollar. Japanese lawmakers passed a bill that clarified the legal status of stablecoins, defining them essentially as digital money. According to the new law, stablecoins must be linked to the yen or another legal tender and guarantee holders the right to redeem them at face value. The legal definition effectively means stablecoins can only be issued by licensed banks, registered money transfer agents, and trust companies. The legislation doesn't address existing asset-backed stablecoins from overseas issuers like Tether or their algorithmic programmable counterparts. Ukraine has signed a deal for the U.S. nuclear power company Westinghouse to supply fuel to all of its atomic power stations in an effort to end the country's reliance on Russian supplies, Ukraine's state nuclear company said on Friday. The agreement also increases the number of new nuclear units Westinghouse will build to 9 from an earlier 5, and the company will establish an engineering center in the country. Ukraine has 4 working nuclear power stations as we speak, and the largest of which is Zaporizhzhia, fell under Russian control days after the Russian invasion began in February, but it is still operated by Ukrainian technicians. Building on earlier agreements, the deal with Westinghouse stipulates that the company would supply fuel to all of Ukraine's atomic fleet.